Hi friends, very good morning all of you. Welcome back to CAP classes. I know this is very crucial time for you because you are preparing for CA examinations and it's not even 10-15 days you have to go for your exam. So I have planned to do a quick revision through RTP. So the one you can see on the screen is RTP of Group 1 for accounting paper, accounting standards portion. So this is the latest RTP, that means 2021 May RTP. So from this all accounting standards we are going to revise now, a quick revision, and we'll also revise the concepts so that it will be helpful for your revision. This is point number 1. Point number 2, remaining RTPs, that means previous RTPs were already done. 6 months back also we have RTPs, no, 2020 November RTP and the previous RTPs. Those RTPs are already, last 6 months back itself I made the video and that is already there in our CAP classes YouTube channel. You can revise all that old RTPs also. As I keep on telling in my online classes and physical classes, 3 RTPs. If you are writing exam in 2021 May attempt, which is going to happen in July. So if you are writing this exam, 3 RTPs, your present batch RTP, present exam RTP and previous 2 RTPs, preparation is mandatory. Without doing 3 RTPs, without doing 1-2 mock test papers, model exams, please don't go for exams because then it will be a bodyline bouncer for you and it will smash your face. So it is too much of danger without RTPs and mock tests if you are appearing for the exams. So last 2 weeks to go. That is the reason I am helping you out with RTP. Okay. So let us cover as many questions as we can. I am starting with question number 16, which is the starting of accounting standards. Okay. First 15 questions are from the other parts of the syllabus. Then from 16 onwards it is accounting standards. So 16.1. This is about disclosure of accounting policies. Okay. Read the question. The draft results of Surya Limited for the year ended 31st March 2020, prepared on hitherto followed accounting policies and presented for perusal of the Board of Directors, showed a deficit of 10 crores. So what is the present situation? The company draft financial statements are prepared and the draft financial statements are showing a loss of 10 crores. So do you want to present financial statements which shows a loss? That is so painful, that is bad. So the board, in consultation with MD, managing director, decided to value year-end inventory at works cost, which is 50 crores, instead of the hitherto method of valuation of inventory at prime cost, which is 30 crores. As chief accountant of the company, oh my god, who are you? You are the chief accountant of company. You are asked by the managing director to draft the notes on accounts for inclusion in the annual report for 2019-2020. Super conceptual question. And need not say this is from old CA final. Previously the same question is asked in CA final. Now, when you are reading, when you are a CA intermediate student and when you are reading this for the first time, you feel like Pavan sir, ye fraud hai fraud. The company got 10 crores loss just to cover up their changing valuation of inventory accounting policy and they are showing profit now. So at present closing stock of inventory is 30 crores. Because of your changed accounting policy, it will go up to 50 crores. That means 20 crores increase. So when 20 crores increases, obviously it will increase your profit also. So it is like this. If you look at the P&L, by closing stock, at present 30 crores is there. Why 30 crores? Because this is prime cost. Inventory is valued at the prime cost till now. So there is a deficit of net profit. So here 2 net profit is not there. 2 net profit is not there. If you are writing net profit this side, you need to write minus it in. The company did not like it. What they did is, yeah, 50 kar do. This is factory cost. Then this will increase by 20. So it will become plus 10 crores. Now shareholder is happy. Now student will ask, sir, simply because a shareholder will be happy or MD will be happy or board of directors will be happy, can we do this? Can we do this? Now try to understand. Accounting standard 1 and also accounting standard 5 said an accounting policy, an accounting policy can be changed in few given circumstances. One is if it is permitted by law, another one is if it is permitted by another accounting standard, and another one is if it results in better presentation of financial information contained in the financial statements. In these three situations, you can change accounting policy. Now the present situation is not required by law, not required by another accounting standard. Now the question is, will it result in better presentation of financial information? The answer is yes. Yes, Pavan sir, how can you tell that? See, in the notes to accounts, when you are developing note, you need to write not only that there is a change in accounting policy, there, see what you need to mention in the notes, disclose in note that the fact that there is a change in accounting policy. The fact that there is a change in accounting policy. To what is the reason for change? Ta-da! To what? Why is that change happening? Reason for change you need to give, which is very important. Which is very, very important. And then what is the impact of change on P&L and balance sheet, financial statements? These three you should include in notes to accounts. Now imagine if this is a capital intensive industry, a factory where big machines are there. Cost sheet, you remember? Cost sheet, if you remember, material, labor, direct expenses put together is prime cost. Depreciation on machinery will come in factory overheads. For this, add factory overheads, which includes depreciation. This is factory cost. Correct? Now you tell me, common sense, if you are running a factory, huge machines will be there. If huge machines are there, huge depreciation will be there. If you do not include depreciation in the value of inventory, it is not correct. Previously, you used to do here 30 crores. So this is 30 crores. Here you are valuing inventory, which is conceptually wrong. Now you want to do it here 50 crores. So this is wrong. This is right. So in the answer, in the notes, we need to mention that since the company is running factories which are capital intensive, including depreciation and valuing inventory at factory cost instead of prime cost, which the company had been following hitherto, will be a good accounting policy, will be a better policy than the previous policy. So what you need to do, previously, till now, the company is following prime cost for valuing inventory. From the current year onwards, the company changed their accounting policy to consider the value of factory cost. 1. 2. Why? What is the reason? First one is this. 2. What is the reason? The reason is capital intensive nature of the company. That is this. Because of which 30 lakhs inventory is valued at 50 lakhs. Because of which the profit of the company increased by 20 crores, no, not lakhs. 30 crores inventory increased to 50 crores. So the profit of the company is increased by 20 crores. Your answer is correct and you got 4 marks. Congratulations. This is very important. This might come in the exam. Now read the answer. Read the answer. Notes to accounts. This one. Notes to accounts. Hello. Notes to accounts. During the year, inventory has been valued at factory cost against the practice of valuing it at prime cost as was the practice till the year. This is the change in accounting policy. First one is the fact that there is a change. 2. This has been done to take cognizance of the more capital intensive method of production on account of heavy capital expenditure during the year. You understand? During the year, you need not put. In general, you can write also. That is second one is reason. As a result of this change, what is the effect? As a result of this change, the year-end inventory has been valued at 50 crores and the profit for the year is increased by 20 crores. That's all. Simple answer. But if you do not understand, the concept, you cannot write answer for this. We'll go to question number 2, 16B, valuation of inventory. The inventory of Rich Limited as on 31st March 2020 comprises of product A 200 units, product B 800 units. Super. So, product A, particulars, product A, product B. So what is the quantity? Here 200 you have, 800 you have. Okay, A 200, B 800 units quantity. The cost of these products are: product A, material, wages, overheads, 40, 30, 20 respectively. Cost: material cost, labor cost, overhead cost. How much? 40, 30, 20. 40, 30, 20. Okay, so put together how much? 40 plus 30, 70 plus 20, 90. Okay, so total cost how much? Total cost 200 units into 90. Total cost 200 into 90. Is it 18,000? Yes, it is 18,000. Then each unit is sold at 110 selling price, 10% selling cost, selling expenses. So net realizable value is estimated selling price minus cost to sell. So this is A, or this is 1. AB you will be confusing again. No, product AB is there, so we'll follow 1 2. So now selling price 110. Selling price 110 less cost to sell 10%. What is 10% of 110? It is 11. 110 minus 11 is it 99? What is this 99? Net realizable value. So total net realizable value is point number 2. This is 200 into 99. How much? 200 into 99. So it is 19,800. So we know that value of inventory is equal to cost or NRV, whichever is lower. I hope you remember. If you do not remember, go to the next house. Neighbor will be there. In your neighbor's house, one UKG boy playing will be there. Go to that UKG boy and ask, hey, how to value inventory? He will say cost or NRV, whichever is lower. Okay, so in this two, whichever is lower, 18,000. This is for first product. Now we'll do for second product also. Ta-da! So for second product, it is material 45, labor 35. Material 45, labor 35, overheads, they are not speaking anything. Okay, so respectively normal selling price is 150. However, due to defect in the manufacturing process, 800 units of product we were expected to be sold at 70. So here nothing is given. So 45 plus 35, how much? It is 80. So 80 into 800, how much? Is it 64,000? Why am I calculating everything without calculator? I have calculator. 300 rupees. What to calculate? 800 into 80. Yeah. Wow, 64,000. Correct. Then selling price they have given 70 rupees, no expenses. So net realizable value 70. 800 into 70, 56,000. So this or this, whichever is lower, is 56,000. So inventory for the purpose of your balance sheet is 56,000 plus 18,000. That comes to 74,000. In balance sheet you will show inventory 74,000. What we have done? Cost or NRV, whichever is lower, that we have done. They have given story, screenplay, drama, but we filtered whatever the information they have given. So finally inventory is to be valued at cost or NRV, whichever is lower. Just go to ICA material and see the answer. They have put it in a different shape, but finally they got this answer only. A 18,000. Their table is different. Pavan sir, can I follow your table? Close your eyes and follow my table, no problem. 100% what we have done is correct. That's all. First one, product A 18,000, product B 56,000, total put together is 74,000. 18,000, 56,000, 74,000. That is our answer also. Pavan sir, we'll go to next question. No time. Exams are in 2 weeks. Fast. Okay. 10. Property, plant and equipment. Question number 17. Very important standard. Without property, plant and equipment question, normally, no question will come. No question paper will come. You are required to give the correct accounting treatment for the following in line with provisions of accounting standard 10. Okay. Trojan Limited. Oh my god. Trojan virus. Limited operates a major chain of supermarkets all over India. Very good. It acquires new store in Pune. Very, very good. Which requires significant renovation expense. Oh, first tell me, can I capitalize renovation expenses? The answer is yes, because renovation without loss of generality in general, subject to exceptions, we assume. And really it happens also, as a matter of fact, when you are renovating, you might be using the space in a better way. So maybe the display will be more, the stock will be more, future economic benefits will be more, or it will attract more customers. So renovation normally will be value adding. So there will be future economic benefits out of this renovation. There will be future economic benefits out of this renovation. Okay, so it can be capitalized. It is expected that the renovation will be done in 2 months, during which the store will be closed. Now the store is closed. After renovation again will open. Okay. The budget for this period, including expenditure related to construction and remodeling cost, 18 lakhs. Underline expenditure incurred for construction and remodeling, 18 lakhs. Can you capitalize this? Yes. Salaries of staff, 2 lakhs. Salaries of staff, 2 lakhs. Can it be capitalized? That is the question. And this salaries of staff who will be preparing the store before its opening, before renovation, they are doing something. Then related utilities cost 1.5 is prepared. So 18 lakhs of construction cost and remodeling, 2 lakhs of salaries, 1.5 lakhs of utilities. The cost of salaries of the staff and utilities are operating expenses. Array, yaar, can there be easy question than this? Dear ICI, why are you spoiling the cream of the question? They gave the answer. They said it is not capital expenditure. Hey, rubber manda, if it is not capital expenditure, if it is operating expenditure, even fool will not write the answer that 2 lakhs and 1.5 are also to be capitalized, because you yourself are saying it is operating expense, no? And also saying that would be incurred even after opening the supermarket. Whether you run supermarket or you do not run supermarket, this 2 plus 1.5, you keep incurring that. Why will we capitalize this? Because it is classroom problem or RTP problem. They are giving like this. In exam, if they are giving this question, no, they will avoid this operating expense wala phrase. They will not give this operating expense phrase. They will not say that these will be incurred. Even if the store gets opened, they will not tell that. You should be very careful. Again, one secret I am telling you. This is also CA final question, present 2021 edition, open property, plant and equipment. This is given as an example. Okay, so what is the answer? Any cost incurred to acquire an item of property, plant and equipment, or subsequent expenditure incurred on any item of property, plant and expenditure which will give you future economic benefits, whose cost can be measured reliably, can be capitalized. This is the recognition principle given in accounting standard 10. What is the recognition principle? An expenditure incurred towards an item of property, plant and expenditure can be capitalized only if the following two conditions are satisfied. First one is future economic benefits. Second one is measurement concept, whether the cost is measurable. These two, the two are satisfied here. So 18 lakhs can be capitalized, but 2 lakh rupees of salaries paid to staff, 1.5 lakh rupees of utilities cost cannot be capitalized because they are operating expenses. That's all. Question number A is over. Now we'll go to question number B. ABC Limited is setting up a new refinery outside the city limits. Note this as a killer problem. Killer. It will slay you. Put a star mark. Try it if it appears in the exam. No surprise. 99% of the students will write wrong answer for this. ABC Limited is setting up a new refinery outside the city limits. Outside the city limits, you are, putting up one refinery. In order to facilitate the construction of the refinery and its operations, ABC is required to incur expenditure on construction, development of railway siding, road, bridge. Though ABC Limited incurs the expenditure on construction or development, it will not, underline, it will not have ownership rights on these items, and they are also available for use to other entities and public at large. Can ABC Limited capitalize the expenditure incurred on these items of PPE? This is the question. Super duper question. Very important question. Concept based question. Now, look here. What is this? This is the refinery project. This is the refinery project you are undertaking. Say, for example, it will be some 1500 crores. Actually, refinery will be much more than that. Okay, we'll also take one posh example, 15,000 crores. Big refinery project. So, to facilitate from here to here, I need to construct a railway siding. Sir, this railway siding I studied in auditing chapter, sir. Audit of items of financial statements. Congratulations, this is the same railway siding. So it is kind of private track you are laying, and one road and one bridge. Oh my God. So to facilitate project, you are constructing one railway line, one road and one bridge. So maybe somewhere in between the road, one bridge is there. In between the road, here one bridge is there. For this three, imagine bridge, road and railway siding put together, imagine you have spent 750 crores. Total project is 15,000 crores. Other than this 750 crores. Now, point number one, entity has no ownership on this. Indian Railways will slap you with left shoe if you say this railway siding is mine. If you say this road is mine, National Highway Authority of India will kill you. Or state government will ask you, are you kidding me? You have put road for your convenience, okay. How can you say wherever I put the road, that road is mine, that land is mine? Then you have constructed one small bridge and you are saying this bridge is mine. No. One, you do not have ownership. You do not have ownership. One. Two, you do not have exclusivity. Exclusivity is not there. Pavan sir, what is the meaning of exclusivity? You are not exclusively using it. General public also can use. One fellow is going on a bicycle, toing in that road. You cannot say, hey, wait, stop, hold on, hands up. Why you entered into this road? Beta, that is not your private road, though you constructed, it is available for public. So there is no exclusivity, public can use. Given these facts, do you think this 750 can be capitalized as property, plant and equipment? 99% of the students say no, but the correct answer is yes. And the beauty of the answer is this 750 as a standalone asset you cannot recognize. As a standalone asset, road, bridge, railway siding, 750 crores. In your balance sheet you cannot show because that doesn't make any sense. But this 750 can be included here to make this 15,750 project cost, because this 750 meets the definition. Any cost incurred to bring the asset into the present location and condition, and which helps to use the asset in the manner intended by the management, can be capitalized. What your accounting standard said? Your accounting standard said any item of expenditure incurred on bringing an item of property, plant and equipment to its present location and condition, and which will be useful in, which will be crucial in, which is incurred to use the asset in the manner intended by the management, forms part of cost of the project. So capitalize karo 15,750. This is the answer. Beautiful question. Many students say, Pavan sir, ownership is not there, Pavan sir. Pavan sir, exclusivity is also not there, Pavan sir. I constructed road, everybody is using, Pavan sir. How can it be my asset, Pavan sir? Beta, there is something called judgment, there is something called substance over form. Considering that this is your asset, no doubt about it. Simple. Think like this. Unless I incur the 750 crores, I cannot do that 15,000 crore project. Khatam. Khatam, but then where is the discussion? Pavan sir, discussion over. We'll go to next question. Okay. If it is a problematic question, I am preparing the table and then we are going to answer. If it is a theory question, step 1, step 2, step 3, I am teaching you. You go to answer also as it is, same will be there. Okay. Question number 18. One more bouncer. Accounting standard 11, the effects of changes in foreign currency rates. The moment the standard title comes itself, half the students will be in their pants. But trust me, one of the easy standards, okay? You really no need to worry. If you need conceptual clarity, I have done already accounting standard 11 in detail. 2 hours of lecture is there in the YouTube Cap Classes channel. You can read. Conceptually, everything is covered here. Now, quick revision, we'll do these 2 questions. Classify the following items into monetary, non-monetary. Non-monetary, monetary, non-monetary. Vikram, Betal. Hey, what is monetary? What is non-monetary? Monetary items are the assets and liabilities that will be recovered or settled in a predetermined known amount of cash. So how much you pay, how much you receive when you have an asset. When you have an asset, when you are recovering the asset, how much of the amount you receive, you know exactly. When you have a liability, when you are settling the liability, how much you need to pay, you know exactly. Those are monetary items. Pavan sir, I have share capital in my books. This share capital is to be paid back to shareholders at the time of liquidation. That day, how much I'll pay, how I know, Pavan sir? In my balance sheet, share capital 10 lakhs is there. But that day, shareholders might receive 100 crores or 25 rupees. How would I know? So, beta, share capital is a non-monetary item. Now, you tell me, fixed assets, non-current assets, are they monetary or non-monetary? Say, for example, I have a building. When I sell the building, do I know exactly how much I receive? No, that depends on that day condition. Condition of the asset, market condition. Bargaining power. But if I sell goods to a debtor, do I know how much I will collect from him after 1 month? The answer is yes. If I put money in a fixed deposit, do I know how much of the maturity value will come? Yes. If I have issued debentures, do I know how much will be paid to debenture holders? Yes. If I take a loan, do I know how much is to be paid exactly? Yes. If I buy goods from a creditor on credit, from supplier on credit, do I know how much to pay? Yes, these are monetary items. So share capital, non-monetary. Trade payable, monetary. Cash balance, monetary. Cash is also monetary item. By definition itself, cash is monetary item. Property, plant and equipment, non-monetary. 18A, khatam. Very good. Pavan sir, what is the significance of monetary, non-monetary items, Pavan sir? Simple. All monetary items will be converted, translated into functional currency, domestic currency from foreign currency using the exchange rate on the balance sheet date, which is known as closing rate. But non-monetary items, once recognized, will not be revalued on every balance sheet date. That is the reason monetary, non-monetary is very important. Items are classified into 2: monetary, non-monetary. 50% of the standard revision is over. So if it is monetary item, what is monetary item, what is non-monetary? I told you. Now we are looking at the accounting aspect. Okay, so if it is a monetary item on balance sheet date using closing rate, monetary items are to be converted from foreign currency into domestic currency. Already they might be in domestic currency, but still you will consider the differences. That's all. So use the closing rate and convert monetary items into your currency again. to see if there are any ups and downs. And any foreign currency losses or foreign currency gains are to be taken to P and L. This is the accounting. If you understand this, half the standard is over. Non-monetary items, we use historical rates. That means on the date of transaction, whatever the rate is there, that rate we use, and we will not translate it on the date of balance sheet. Every balance sheet, non-monetary items will not be translated into domestic currency again. What is the rule? Monetary items translate or convert on the balance sheet date. Non-monetary items don't convert. That's it. Now, trade payables, hold on, trade payable, monetary or non-monetary? Monetary. Okay, trade payable is a monetary item. COVID protocol, if you are sneezing, don't do like this, do like this. World Health Organization is telling you follow. Okay, sir, but you are only in a studio where no one is there, na sir. But habit should be habit beta. Trade payables of CAT Limited include amount payable to JBB Limited 10 lakhs recorded at the prevailing exchange rate on the date of transaction. Transaction recorded at US dollar 1 is equal to 80 rupees. Already US dollar is appreciating against Indian rupee and Indian rupee is depreciating. We are crying for 72 rupees, 75 rupees, 77 rupees. ICA wants it to be 80, 85. Are you kidding me? They have given. What should I do? Normally study material all 40-45 rupee questions will be there. RTP 80-85 questions rupees will be there. So that even next year or that next year, if actually dollar goes to 85 rupees also, this will be hot latest question. Hello, anyway, so transaction happened with 80 rupees, 10 lakh rupees. So first on the date of transaction, what is the journal entry you will write? You will write the journal entry. You purchased goods, no? Trade payable. Okay. Inventory account debit to trade payable 10 lakhs. 10 lakhs. How 80 rupees, no? 10 lakhs divided by 80 rupees. So that is 12,500 US dollars you bought. At a rate of 80 rupees you converted. So it is 10 lakhs. This is journal entry 1. Okay. Next. The exchange rate on balance sheet date. Oh my god. Balance sheet date. It is 1 US dollar is 85 rupees. Dollar rate increased. So you need to pay more money to your supplier, no? You need to pay more money to your supplier. Pavan sir, ये तो loss है हमें. Yes, but observe one thing. Inventory is a non-monetary item and we will not change. Trade payables is a monetary item and we will change. So trade payable is equal to 12,500 US dollars at a rate of 85. Oh my god. So it is 10,62,500. So when you purchased goods, you thought you will pay 10 lakhs to them. But now there is loss, foreign currency loss, because of which you have to pay more. At a rate of 85, you need to pay. So you need to pay 10,62,500. So your liability increases, which results in foreign currency loss that goes to P&L. So foreign currency exchange loss, in brackets write on P&L account debit to trade payable account 62,500. 62,500 being conversion of monetary item, that is trade payable, using the closing rate and recognizing such foreign currency exchange loss in P&L account. See how beautiful the language is. This should be the language you use in the exam. But Pavan sir, the kind of terminology you are using in that PPE, recognition, measurement, in that accounting standard 1, disclosure, and then accounting policy change and all, you are singing the song like you are a pro. But our rubber brain will not remember anything, sir. What to do, sir? Practice karo, babu. That's all. This question is also over, and this session is also over. We have done 6 questions. I hope you understand all the questions. Fatapat revision bhi ho gaya. We'll come with series of videos like this. Keep watching Cap classes. Thank you.